So the reasons that we like China relative to EM, albeit we do have downside to our target prices, for example, for Hang Seng, but they're less than for EM, is that we have a stronger sovereign balance sheet which can be deployed, and China did that in 08-09, and that was a reason why China outperformed then. So China can stimulate more than EM that are constrained by their weaker sovereign balance sheets. It's got a quite attractive sector skew, so it already has quite a high online economy and tech skew, new economy skew, and that includes within the A-share market these days what we call China Urbanization 2.0 theme plays in A-shares, and the renminbi is likely to be less impacted, and again we're already seeing that. There are clearly issues that China faces, in particular heightened trade tensions with the US that are back on the agenda. But going back to your original question and the reopening of Shanghai Disneyland, what we've observed is that actually industrial production came back quite fast and manufacturing. There's significant issues, as there are everywhere, around exports to other economies. But the consumer discretionary was slower to come back. It'd be really interesting to see whether this travel tourism related segment that was growing so strongly, whether it comes back in any sort of meaningful way over the next few months.
In terms of just what you've seen in earnings, what do you think perhaps has been unfairly dragged down in this environment, is now looking a bit more attractive?
Well, if you look at the sectors that actually did best, telcos, healthcare, probably unsurprisingly, and semiconductors did well. And by market, Korea and Taiwan did relatively well. And our preference has been throughout this year to be in the new economy sectors, and particularly actually the IT hardware semis sectors, where we're clearly getting some at least short-term benefit to revenues from work from home. As clearly people are buying more equipment, either for themselves or their firms they work for are doing that. But it remains to be seen, given the scale of the job losses in the broader economy, whether that demand surge is persistent. We just had the first 10 days export data from Korea, which is a very live data point. And it was a major surprise on the downside. Down almost 50% year on year for the first 10 days. Within that, auto sales, again, perhaps unsurprisingly, down 80% year on year. But semis and memory chips down 20%. So we need to watch very carefully whether these sectors that have been somewhat better performers up to now start to deteriorate as well following the overall broader situation.